What is going on, guys? Good morning. We are live, ready to go. Let me just get rid of some of these things. Market's about to open in a few minutes here, 5 minutes or so. We're about to be going live right now. We're going to be going over what is going on. We're going to be talking the rebound, anything that I have done, and of course, penny stocks. And also I want to dive into some more stocks. I want to dive into more potential swings, but a couple things that I found. I have a list of about, let's say, like 15 stocks right here. That are like top of my list of what I'm looking at next in terms of I'm not maxed out in terms of all my money in the market, but I have a kind of the max amount that I want to at least put in right now. I want to have at least, a portion of my account cash just in case something happens, something happens and you got to average down or you need cash for some crazy opportunity that you wouldn't have had not had the cash. So that said, I do want to dive into what is the market doing. So the market right now, here's yesterday. I actually have a debit spread. If you guys haven't seen the debit spread video on the TC trading channel, link down below, check it out. It's something that I'm looking to probably do a little more of, and I want to do more, dive a little bit deeper into some more of the different option spreads and stuff. So we'll have some more videos there, but 50 SMA is our resistance. I mean, we can see it very, very clear. I mean, look at this. We kind of got up over that level. Yes, I mean, last week we tried, but we couldn't break it. This blue line right here, I'm going to get rid of the trend line for now. A little cleaner to see. Blue line right here, we got up there but got stuffed. We got stuffed 3 days, couldn't really break through, and boom, plummeting down. Scares of the government shutdown and whatnot as well, probably not helping, and yields going up and whatever. So that was kind of yesterday's deal, down 2%, which is pretty big. We haven't really had a day like that since, well, we kind of did, but I think actually on the Monday of last week, we opened up and we were down like 2.5% at one point, but we ended up coming back, and I think we closed on a decent amount under 2%. We're only down like 1.5 to 1.75% on SPY because we recovered pretty nice. That was not the case yesterday, but we are rebounding at least as of right now. We're up. Pre-market's up about 0.25%. So we'll see if that continues or if we see further downside today. That 433 on SPY was the lows roughly yesterday. So if we break below that, we'll probably head down to that 430, maybe even into the 420s. We'll see, but that's something to watch going forward today. So we'll be paying attention to that. Good morning. Hope everyone's doing well. I'm feeling pretty good about how, ultimately, right, we're seeing the market pulling back. And yesterday was a really good day. Actually, no, the day before, Monday. Because we noticed, if you notice on Monday, look at IWM. I'm going to go back to the daily chart on this. So IWM, small caps, this was up somewhat substantially on Monday, whereas the market was, I think, slightly red. So this is pretty interesting. Now, of course, the market was down a good chunk yesterday, so IWM took a tumble, right? But it gave me at least some hope, and I felt pretty good about small caps kind of starting to break away from the market, as long as we're not seeing wild swings. Now, yesterday I would kind of classify as a wild swing. Down 2% isn't something you see every day on the S&P, right? Usually, you're when things are calm, you're trading, 0.5%, that's kind of it, up or down on a given day. You're not really making wild swings over 1.5%, 2%. So we'll see what happens, but I'm looking forward to that, to watching how IWM performs versus SPY. So right now, IWM is up roughly 0.4%, SPY is up 0.25%. So it's a little bit it's outperforming slightly, but we'll have to see how the day progresses on that. It's still kind of fitting. It's still fitting into the plan of kind of what we were expecting to some degree. Bunch of stuff some stocks had some news today, but pre-market gainer list on the right-hand side, as the market's about to open up here in 10 seconds, isn't much. I mean, there really is a 28 percenter, so yeah, nothing crazy in terms of the gainers. There it is, market up. There's the bell. Let me lower that down. But so now we'll see how things play out. I will say also, you have to give credit to the airline. Well, give credit. American Airlines, I want to pull up because just get a good sentiment for the overall sector, for the travel sector, for airlines in general. You guys already know I have some leaps, some long-term calls on Save, Spirit, and JetBlue. I just like the range on those charts better than American. But this has bounced off this support and has come right back up to our resistance right here. So we've already done it. We've already come back up to that resistance on American Airlines. But even though the market was down so much yesterday, it held up. It was red, but it held up pretty well. So the travel sector is actually holding up quite nice, even though the market was red Got some price alerts that are hitting. Let me just lower that. And we'll see. So I have ELYS. There's some decent news here. I don't have as much as I used to have. I sold a good chunk, or I sold it all onto this spike. This one day it was up 30%. And then I rebought it here down sub 5, and I had an average at 474, roughly. It's 474.3. And now we're at 515. I'm going to ride this one up. I think we can get a bigger move into the end of the year. Reason why, I'm going to start pulling up some stuff. We're going to watch, of course, the market like usual. Let me change the gainers here on the right-hand side to today. So we'll watch that list and we'll see how things play out. But I'm more focused on looking for diving into some new swings and finding some stuff, going a little bit deeper, peeling back, some of the stuff. So I want to do that as well. So ELYS had some news yesterday that kind of went somewhat unnoticed. I guess it wasn't noticed too much or too heavily. So if I go to FinViz, a bunch of places you can find the news. You can have news streamers, you can have Seeking Alpha free, FinViz free, but here it is. So LS Game Technology and New York State Restaurant Association announced a memorandum, is that how you say it? I don't even know, of understanding partnership. Okay, so essentially I read this through yesterday and I was like, oh, this is actually pretty cool, because what happened here is ELYS, they had their first deal, or Ellis. They had their first deal, right? They got into this place in Washington, D.C. And so their model that they have working in Italy is to integrate sports betting with individual restaurants and individual bars and stuff. Now, it sounds like, okay, well, that's not going to be, how you scale that. Well, they're looking to scale it up over time. But ultimately, their idea is to have it in place in these small places so that they can eventually get picked up by a potentially like a bigger name, a Dave & Buster's or a bigger name, or get bought out. Who knows, right? That's the idea. At least that's kind of how I'm seeing it. And they've talked about that too in press conference and in calls and conference calls and whatever. But the thing that's interesting to me is that this right here, this paragraph, I believe right here, for New York specifically, right? And you guys know, a lot of people, I haven't been, but I've heard that, you remember if we heard the vaccine passport thing, or whatever you want to call it, you're required for, in a lot of restaurants in New York to have a vaccine. You have to show proof of vaccine, right? So that said, right, prior to that, a lot of these places were shut down, or they were, understaffed, or they weren't getting much business. And so they're starting to come back. And, last 18 months have been super crazy and difficult for these places in New York. And so this could provide an additional revenue stream as things get back, right? So now you could integrate sports betting with some of your bars and restaurants in New York. Now you have all of a sudden a different revenue stream that you didn't have. And now, right, you've been struggling, you're trying to make it back to where you were, get back up to full strength, you're understaffed, right? This could be an opportunity. So I think it's actually really cool. But this news, I think, is bigger than people think. It doesn't come out and sound flashy. There's no X number of $1 million potential deal. No, it doesn't have that flashy number. But I think under the surface is actually pretty big news. That's why, this is the type of stuff that I'm expecting more of, as the ball gets rolling on ELYS. And so I'm expecting it to do nice things in the coming weeks. So we'll see. We will see. What do we have here today? Okay, so let's check the market right now. What's SPY up to? And we'll see how that's playing out. And then we'll see. So SPY's up about 0.3% right now. And we'll see. It's the first few minutes of the market open. It's up open for less than 5 minutes here. The first 5-minute candle popped up, popped down. So you get that volatility for now, but nothing crazy going on that front. So we'll see what happens on that front. We've got Tesla. Let's see what Tesla's doing. Nice candle on Tesla. It's funny. I actually added a heavier chunk of Tesla into the IRA. When was that? Back in the 750s, which has been nice. A couple of days ago, I was like, oh, that's great that it kind of just went up. I want to look at CEI as well. What's CEI up to? Because CEI has been a monster as of late. Is it red? It's red. I'm expecting a pullback on CEI. I would expect CEI to pull back down towards this 260 to 235, 225 range personally. I think that would be an opportunity to trap more shorts for the next leg up. I think if CEI wants to go straight up from here, you're at risk of a pretty big pullback day at some point very, very soon. So we'll see what happens. But it's holding up around the 3 area. So if it can hold over 3, it's still looking good. And that's, that's CEI doing what it's doing. Let's see, VISL, one of the swings I've got. I want to start buying more back down here if it gets back into this 170 range. Again, I've been leaving some room to add in heavier there soon. average at 222 roughly. It's not terrible. A little bit of a longer term swing, at least how I want to play it, unless we get some new earnings and I'm not liking it anymore and things change. But that of course can happen at any time. Okay, so we've been seeing some crazy runs. I do have some NAKD, a smaller amount. I want to see how it holds up today. If it can't close up today over this 75 area, I'll probably get out. I sold some of this already at 93, and then I was looking for 97. Of course, we haven't gotten it yet. We got close yesterday. I sold some there, and so average is not great. It was more of a momentum-based play. I want to see it holding up over 75. If it can hold 75, we're good, but this is an area that was a prior resistance. If you go back here, that I want to see it holding support. Could it come down below that level and then eventually run? Sure, but I'm just not interested in holding it through that type of move. So that was a smaller size, so I just don't really care. I'll let it do its thing. I'm giving it some more room. It was seemingly like it had, after CEI, this seemingly had the workings of a move to 1+, and I thought we'd get a $1, 110, and then eventually a pullback. We didn't get to 1 yet, so maybe everyone's selling before 1. Yeah, sure. I wouldn't be surprised if that is the case. Okay, so market's kind of green. I'm going to add another 50 of this guy, just because I kind of like this range, but I want to add a little bit heavier eventually if it does come into the 170s on VISL. So we've been talking about all these kind of micro pennies. NAKD, the CEI was a 30-cent stock. So everyone's like, okay, where are the next ones? Well, look at this. USWS is popping on up. This was a 75-cent stock a couple days ago or yesterday, right? Now it's hit up over $1 in pre-market. Now it's pushing up to 93. So you're starting to notice that these pennies, these micro pennies, are going like one by one. So I'm looking back to prior kind of cult runners, prior big runners, and I'm thinking, okay, where could we be looking? And one of them that comes to mind is ZOM, ZOM. I want to see it holding up around 50 cents right now, which it's trying to do. So this is a decent risk reward in my opinion. If you're looking at ZOM right now, risk it down to 49. So you're going to risk 5%. But I think we can certainly see, 25% plus on this at some point if the herd shifts over here. The only thing though is that before we do that, before I take a stab at it, it's on my list. I'm not going to just jump in randomly right now. I'm going to look at this and I'm going to assess a little bit further. So let's take a second to dive into this. So what I'm going to do is I'm going to start here at FinViz. I'm going to go to ZOM and we're going to start going one by one through what we got on this guy. So it's right around 50 cents. We have a float of looks like we got a pretty massive float. So it's not a low float stock by any means. A market cap of 500 million. What I need to know is I need to know their second quarter earnings. I'm going to go in here. I'm going to go to the story continues. I'm going to go to Command F. Cash had cash and cash equivalents of approximately 276.2 million as of June 30th. Okay. Interesting. So they got a decent amount of cash, right? Net cash. I'm curious to see if they will say, if they're going to say how long this will lead them to roughly. Increase 100 mil, 183 mil. Okay, it's interesting. So they didn't give us like a runway. Okay, so I'm thinking like sometimes they'll announce in these, and then they'll be like, yeah, they got a cash runway out to quarter 3 of next year or this year or whatever, right? They'll put a random date. And I would never believe those word for word, but they're helpful. Okay, so that's interesting. So we got ZOM's cash understanding. Now, what does that mean? It's about half the market cap is in cash, which isn't bad. Only problem is that in a lot of pennies right now, personally, I like when we have a little bit closer to the market cap in cash. So for ZOM, risk of an offering when you got 200 something million in cash isn't terrible. There's a bigger story. We can dive deeper potentially into kind of, let's see, how much are they spending? Let's see, net loss of 4 million for those 3 months or whatever it was. Not terrible. Cost of revenue was 35,000 and 41,000. So it doesn't seem like their costs are that high relative to the amount of cash that they have. Research and development expense. Here it is. This is important. 0.3 million. That's not bad compared to, they got these down massively. They decreased by 93% their research and development expenses, which is pretty good. seemingly, right? So that means that cash holds more value, right? If they're just burning cash and they're just like funding different things and like they're tossing, for example, right, Zom, they got $275 million in cash. If they're just tossing like, tens of millions of dollars out each quarter just for research and development, now maybe there's use. And if they're not getting traction, it's like, okay, what are you guys doing, right? You don't want to see that. Selling and general administrative expense, $5 million compared to that. So that went up a lot. Increase due to an increase in share-based compensation expense. Okay. But it doesn't seem like that is like very, very substantial. Net cash used in operation activities, 4.4 million compared to 7.9. Decrease. Okay. I mean, I don't think it's a huge risk right here. Of course, you can be always at risk of an offering, a reverse stock split. Those are your general risks. Let's take a look at BAM SEC, because I think this is probably where I would want to be. If I had to pick a penny stock right now that I would want to be in next, it's probably this one, my guess. Okay, let's go to the bottom of this. Do they have any recent buying? No, everyone's been selling, exercising options and selling as of late, which, is whatever. Not huge. Buying is probably more important to at least understand. Okay, so I mean, this is where I'd be. I'd be looking at ZOM. This is like a heavy watch right now. They got a lot of cash, relative to market cap. It's a little bit over half, but I think it's a decent risk reward into this time of year if it holds 50 cents. So where do you risk it? I wouldn't want to hold ZOM below 49. Now, I said the exact same thing about CEI. Exact same thing. When CEI fell below 45, you go back to CEI. So, you can be wrong a bunch and then it can run right after, you stop out. But CEI, if I go back, let it load for a second. Now it's actually holding up nice today. Come on, I got to zoom in on this guy. So CEI, I said, okay, I want to see it holding 45 because 45, if you look back to the left, was the prior area that it held up back this time last year. And what did CEI do? It held 45 for a couple of days and then fell below. I literally got out right when it broke below that level. It fell to 33 and then ran straight up. It never kind of like held 33 and bounced 35 and kind of held up. It just kind of went straight up. So interesting. But so that's what I'm kind of looking for. I'm looking for ZOM to kind of hold that 50 cent level. Ideally is what I would want to see for the next leg. And this is when they had, what was this, the 25th time frame on ZOM. What was that news back in then? Maybe it was the earnings. I'm trying to think. I'm looking back to that level. We go back to ZOM. When was the last push? Around the 20th. So I'm not really sure. Second half of 2021 should be much easier for Zemetica investors. I don't know. I'm curious. As this has come down super low, if everyone starts jumping back into penny stocks, I'd be very, intrigued to see this. I would think this is going to get a good run up, I think, to 80, where it hit last time, 80 cents. A 30-cent move, I think, is very, very doable on ZOM, which would give you a 50% return or more. And if you risk it from here down to 49, you're going to risk yourself 5%. I mean, the risk reward there is beautiful, right? Beautiful risk reward, at least in my opinion. So I kind of like that. Okay, market's not really doing, it's just falling a little bit off. And we'll see if it holds up the lows from yesterday. But overall, though, we're noticing the market's been kind of just like, it's been kind of, choppy. Top gainers right now in terms of small cap land, there isn't much. 27%, 29%. That's nothing crazy. I think we could be waiting to the end of the month, and once we get to next week, we'll see if we get some bigger runners. As historically, we are out of the worst month performance wise, I guess technically. So we'll see. I'm going to use it as an opportunity to add into dips on stuff that I like. So WWR is actually one that I sold 50 shares of. I'm going to grab 50 more right now as we speak. I got PT at 10:45. Yes, I know. Okay, so this is one that I love WWR down here. I love it. They are a company that they're not a biotech, but they have the amount, their cash is equal to the market cap right now. Yeah, market cap of 120 million, and they have 119 million in cash. So, I mean, risk reward for me, my perspective, I like it right here a lot. BW, kind of a carbon capture play, holding the 6 nicely. I'm just chilling on that. I should have sold some yesterday. I had to sell at 693 for, a fifth of my position. it hit 687. So I was 6 cents away. I probably should have just taken that chunk off, and then I could have rebought them right here, right? So, we'll see. But it's holding 6. It's a longer term approach anyway there. So I'm letting my swings do their thing and giving them. I'm not trying to over trade inside the swing. $2 again. I'll take whatever I added today off if it pops, right? So if today I only added 50, so I'll take 50 off. It's nothing crazy, but it's a way to kind of just play around inside, get your average down, and at least that's something I like to do personally if I'm paying attention to it, if I'm watching it. But a lot of these I have longer term approaches. So I mean, VISL, I have no intentions, and I don't think we're going to see this thing spiking. This is not a stock that's going to generally spike up in one day unless they got some crazy news. This is not going to spike up to $3 in one day. I think we have a good risk reward from this sub $2 to $3 target would be where I'm looking to take profits at, or take a good chunk of my shares off if we get that level. But I don't think it's going to happen in one day. I think this will need to build and build and build, and we'll need to get some news to kind of fuel that building, and it will take some time. So an example of one that could be a one and done, NSPR, and it has been in the past, right? I got a lot of sells because it's a thin stock. So a stock that's super thin, this is one that could drop news at any time. They dropped patent news, and the thing went up 15-20% on patent news, which isn't big. That's nothing crazy. That's what we got back in here on the 15th of September. So I want to make sure I have some sells in case we get a spike, a pop and drop. I at least take a good chunk of, or at least, a half my position off on the way up, which at this point, would be amazing if we got 6+. But it could happen, at 4 a.m. on some news that came out over the weekend. Who knows, right? It could happen. But this is one that could spike on news, be a one and done. And so I want to make sure I have my sells there. But VISL is one that, and same with ELYS. These are generally not going to be stocks that I expect to pop and drop like that. They're bigger picture plays that I'm looking for them to build, and hold up. So there's different ways to swing on true low floats. It really comes down to the float. ELYS isn't let's see, what's the float here? ELYS is a 14 million. That's a pretty low float. You would need some pretty good news, and then this thing could go straight up and come right back down. It could be a pop and drop. But for the most part, the low floats is where I'm, cautious in terms of I have sells set. So NVOS is one as well. What is the float here? At least we're getting on Webull 8 million. I mean, that's a super low float. The only problem with NVOS is that I think they're still restricted from buying on TD Ameritrade for whatever reason. I mean, I don't know, but we'll see. Let it play out. Bottomed out play. I like where it's sitting at right now. Market cap here. What's our market cap? 49 million. This takes one piece of news, and this could double, on a piece of news. This is a traditional swing. Also, these types of swings, NVOS, the ELYS, NSPR, this is how I used to swing pre-pandemic, and we're getting back to it, which is fun. It's where it's patience. You don't have to watch a screen all day. It's patience. You know what you're buying. You know your risks, and so either they drop, this happens and you do this, or it spikes off of news one day when you wake up and boom, you take profits. I love these are the most fun. They're the most fun because when you could be in a low float small cap, they're the most fun to wake up to, or to be, whatever. You're up and all of a sudden you notice the news hits and everyone's slapping it, right? You're already in, but everybody, on Twitter is like, oh, this is great news. I'm buying now. But they're already buying when it's up 20% off that initial news spike. You're already in because you've done the due diligence, or you just kind of get a feel. And there's also there's a little bit of a feel, and then there's also the research and the planning behind it, right? So there's both. It comes down to feel sometimes. Well, like I can tell you right now, NVOS is more of like a feel, right? It hasn't spiked. It hasn't run. They all run. Like at some point, all of these stocks will get a day where they just rip face and they go nuts and the thing goes up 100%, right? If you look at all these small cap charts, they all have it. They all do, right? And so this is kind of one of those feels, right? That has that feel like this is a 1 PR away from 100% runner, or I'm not saying 100%, a 50% run, right? And a beautiful profit. And then there's some more where like WWR, is one of those that's like, I've done some more due diligence. I know how much cash they have. I actually like what they're doing. I believe that what they're doing is necessary for EV batteries, right? Going forward, it is. And so this is a longer term swing. So then there's different ways to swing it, but you'll kind of get a feel over time. And you'll also just see a chart and say, this is a good chart, like WWR, it's kind of bottoming out right here as we speak. I think it's a good chart, in my opinion, because I noticed the reason why I can kind of also classify a bottom is because when you're trading at cash value, could the stock go lower? Sure, right? Fundamentals, when a stock gets overextended, they can go higher, right? Even if it makes no sense, they can keep going higher. So could this go lower? Could any stock go lower if the market's red or if there's just bad sentiment or if somebody market sells their entire position? Yeah, it could go lower. But that's the time when it's like, this is where you can hone in and be able to add these dips with confidence. And then I think having the confidence is huge on these things, because it's very easy to just get caught up in this thing and then this one and then the next one and then CEI comes in and you're chasing CEI. Now maybe that works out here and there. CEI, look at this, it's going crazy. It's at 336 now. At some point, I think it's going to pull back. Today, maybe we get a move to $4, $5 today, and then a hard pull. I think you got to watch SNDL as kind of like your side-by-side comparison. Not right now, but look what SNDL did, months ago, right? SNDL had some crazy volume days, went nuts, had this massive spike, and then it pulled back massively after that. So waiting for CEI to pull something like that, the slower the move, when I say slower, if you're going, 5, 10, 20% per day, great. But if you have a day where it goes 100%, like today, if CEI pushes a 5, you're almost at 100%, right? You're roughly, what was that? Like, it'd be like 50, 60, 75%. That's a crazy move. You probably touch 1 billion shares traded in volume, because yesterday we hit 750 million. That's probably your blow off. And then you get a bigger pullback the next day. That's just something to be paying attention to, I think, with a stock like CEI and how it's moving. So if you're in and you get a crazy move to 5 today, or maybe that happens tomorrow, right? Just make sure you're locking and adjusting your gains because you don't want to be holding the thing. C5, look at your account taking screenshots. Next thing you know, you wake up the next day and it's at 3. It could certainly go from 3 to 10, but make sure you're locking something in. That's at least how I would do it. Let's see. Good morning. CBAT bottom down chart. CBAT is another one too. I think we have talked about before. This is bottoming out. So now it's coming down into these ranges that I kind of like right here, sub 240. Market cap is 210 million. Only problem, right, is it's a Chinese company. That's the thing. They've been getting beaten down super, super hard. Eventually they're going to bounce. I think they're going to bounce, but the question is when. So CBAT, at some point this is going to be, let's take a look. I'm going to dive into, let's do the whole thing here. I might add it to my list as well for the time being. Okay, this is getting beaten down. You are talking about 218 million market cap. Participating upcoming JP Morgan, China EV battery supply chain forum. I mean, they're going to be there, right? You would think longer term they're going to be there. Let's take a look. Reports, earnings. Let's take a look at the earnings. Let's just take a peek in here and see what we got. Let's take a look. I always like to look at cash first, and then we can go from there. 33 million in cash compared to 11 million. So that's good, right? They increased their cash position. And net income was 2.7 million compared to a net loss of 1.2 million in the same period of 2020. Okay. Let's see. Operating loss, 2.7 million compared to 0.9. Scrolling back up, total operating expense 3.8 million. Profit was 1.1 million, an increase of over 1,000%. So that's good. Let's see how that progresses into next quarter. Cost of revenues 4.8 million. Revenues are 5.9, which was a 27% increase from 4.6. So it seems like their profit went up substantially. Revenues were up a good bit. And so these are the fun opportunities, I think. Could it go lower? Yeah, it could certainly go lower. But these are the opportunities I think that you have where these things continue, like where you have good earnings, right? And then I noticed a lot of these stocks, and maybe that's because they did a lot of offerings. They had a crazy, conductive, I guess, environment the past year for small caps. Yeah, they all got very overextended for sure. But a lot of these companies, they took advantage and they raised money, and they raised money for research, for their expenses. And so they were able to pay off some debt. They were able to build up, a decent cash position. And now they're in a comfortable range. This thing, I think under 250, I think is not a terrible idea. I would give it down to $2 though. So you're going to risk, you still got 40 cents, I think, is an area to accumulate. So if you do the math here, let's say you take let's say you buy a position in 3 parts. This is how I kind of think about things. I like to buy things in, 4 parts or 5 parts sometimes. So let's just say you buy it in 3 parts, or you buy it, let's just do 4 parts because it makes it easier. Every 10 cent drop you buy. So you buy here at 240, you set another chunk for 230, 220, or at 240, 230, 220, and then maybe 2. This way you're buying in 4 parts. You now have a good chunk at this level, so you have a piece. So if it runs from here, at least you're there for the ride. But you're averaging down into this box right here, and your average ends up becoming down towards like that 225. So now overall, by the end of this, your average is 225. You're going to roughly risk yourself from 225. Let's do that math. To $2, you're going to risk yourself about 11%. But let's say your targets are at least 3. What's that? If your average is 225 and your target is 3, your initial target is 3, that's 35% upside versus an 11% down. So you have roughly a 3-to-1 ratio. That's a good risk reward. So as long as you have a plan like that in place, this is good. It's tough to buy, right? It's tough to come in here and say, yeah, I'm going to buy this thing. This chart looks horrible, right? It's just downtrending. It's like, oh, when is it going to end? It just keeps going down, down, down. Eventually, right? What you're doing right now is if you're buying this, well, everybody is ditching and they're selling and they're getting out and they're like, I gotta get out. I can't. It's not doing anything. It's too slow. It's boring. It's this. It's that. You're picking up those shares, and so I think one of the biggest things that I have kind of picked up, and one of the biggest things I think that's helped me is if you can understand the psychology at play and you can do the exact opposite of the masses, because the masses are going to lose. The 90% are going to lose, right? So do the opposite of the 90% and you put yourself in a better place. So if you're buying when everyone's selling, now, of course, you can be doing that, but you have to have some sort of risk management. You have to have a sense. So if you were doing that 2 months ago, great, but at the same time, we kept coming on down. Now you're coming back to a point where this is getting down to some areas of support. So as long as you have risk management in place, you put yourself in a decent spot. I think down here, risking it down to 2 is what I would do. We had initial pop this time last year. It popped up to over 3 and then it pulled back and it found $2 to be support. That's why 2 is that's why I like 2. So $2 is where I would risk it down to. Of course, what will end up happening, right? This will come below 2. Eventually we'll find support and then they'll probably make a move at some point in the future. But if it's something you like, keep it on your radar. There's no, you can stop out and get back in. You can always get back in. There's no, I stopped out and now it's off my radar. I move on for today or for this week maybe, but come back to it next week. It's definitely it's not over. As we speak, SPY is pushing on up a little bit. I have is a debit spread. So I forget how much I paid, but the risk reward here, in my opinion, yesterday was pretty good because of how much the market was down. So what do I need? What I need SPY to close the week over 436 because I sold a 436 call, I believe, and I bought a 435 call. So I did that yesterday on the way down. I didn't time the bottom, but what essentially I need SPY to close over 436 by October 1st, and as long as it does, then I'll hit my max profit on that spread, and my max loss would be if SPY closes under 435. So if we get a crazy bounce today into tomorrow, I'll probably take the profits on that spread just because I have the profits and I might as well take it because it'll be up there. It depends on how much we bounce, but that's what I need. A close over 436 is max profit come the expiration. So that's what I'm looking for. We'll see. I thought that it was a decent opportunity yesterday to grab that, so we'll see how that plays out on that guy. Yes, here's a problem with comms. I was looking deeper into comms yesterday actually. Comms is getting crushed, and I got out of this one a while ago. I still thought it was a solid play as long as it held up over this 180, but it's now falling below that. Comms, I looked, they have essentially no cash, so they're coming down What's their market cap at? Their market cap's 120 million. They have essentially no cash. So what I'm expecting, I believe they have an S3 on file as well, if I'm not mistaken. So they can do an offering on comms. Let's go to comms. They registered a shelf on the 20. Did they just do an offering? Let's take a look. They may have just done one. I don't think so. But they filed an S3, a mixed shelf. So here's what I'm thinking comms is going to do. My guess is comms in the coming weeks is they're going to drop a PR. They're going to try to spike this stock up, and we'll see depending upon the news in that PR. They'll try to spike it up, and then they're going to do an offering. That's my guess. We'll see. Maybe they just do an offering now. I mean, it would be kind of stupid of them to do an offering now because there's no attention on their stock. That's my guess. So if you are in comms and it spikes in the coming weeks, I would take profits immediately because I think that they will offer. So what I've also been doing as well is noting that on my swing watch list. So like comms and then TMBR is the same exact thing. I like where they are chart wise. So I would never short these stocks now just because they have the opportunity to do an offering. No, but I note them. I don't want to risk them personally long right now because of the opportunity, or because they don't have much cash and they have the threat for an offering. So TMBR is a bottomed out play. This is probably gonna spike. But if TMBR spikes, depending upon the news, we'll see how the news comes out if they drop news and if what it is. If TMBR spikes, it goes to like 160, right, or it goes crazy. I know that they're very low on cash. I know that they're probably going to do an offering. It's the cycle of these penny stocks, so maybe I initiate a small short position and swing it. Maybe that's an idea, right? Or I take a short position on a crazy spike, and I take a short position into the midday, and I look to hold it into the after hours as long as I have a stop loss in place. And of course, I'm not going to be stupid, right? Put a stop loss on. If it breaks over the high of the day, get out, right? You can always reassess and re-enter, but this is one that I'd be looking for a possible short back on down because I know that they have no cash. So you kind of get a feel for that. So comms and TMBR are two that I've had on my list because they're bottomed out, but I know that they don't have any cash or they have very low amounts of cash. So I would be very, very interested to see if and when they drop news, if they offer very, very soon after that. Just a cycle that you see with a lot of these stocks. Let's take a look at the airlines. JetBlue doing its thing. I want to see it holding up over like the 1575 roughly on JetBlue. Save. Let's take a look at this guy. What's it doing? It's up today, barely. But they had a nice move into the end of last week, so they had decent moves. What's CCL up to? Carnival Cruise pulling back a little bit. Carnival Cruise down to like $25, and then we'll see. I think on these, right, they had some good moves. These are stocks that give them a couple weeks to a couple months. Let them work their way through. Is how I would see it. What else? There's one that we talked about in a live stream, AMAT, for a possible breakout up over this 145. This is not a terrible idea on the recent dump with the risk down to like 125 here. I wouldn't want to hold it below 125, but that's going to risk you $6 for a move of at least, you're looking for at least like, back up to resistance, you're looking for at least 12. So decent risk reward. And then if you get the breakout, look, you're looking for way more. You're probably going to 150, 175 pretty fast if that breaks out, ideally. So I would see it. Let's see. What's up? Hopefully, if we look to the left, we can get a sense for, how the portfolio is up to today. It's just everything's kind of slightly red. NAKD is not holding that 75. Let's see if we want to get out of this thing. Yeah, I'm going to probably get out of this right now. Let's see. Because I just don't care to be here as it's not holding support. So let's see. Okay, where are at? I had a little more than that. I sold some at 93. And then I was looking for a little bit more, and then we just didn't get it. So I at that support cracked them out. Probably like a wash on that one, probably even on the week, but it was a smaller position. Outside of that, we have, if you look to the left, it might be small, but the biggest red stock or position is down 1.94%, which is like not really much. I have these SPY calls. This is the debit spread, so SPY is just kind of holding up. I don't really care. As long as SPY closes up over 436, I hit the max profit by the end of the week. Over 435, I think 435.50 or something like that roughly is like my break even. So we're still in the green on those as we speak. But I think we could probably get a little rebound into the next 2 days. We'll see. We will see. We're still, I mean, if you look at SPY, we're on track. Let's see how much we are down roughly from the start of the month. Oh, shoot. I gotta zoom in on this thing. I hate when it does that sometimes. There we go. Oh, no. There we go. A little bit better. Okay, so from where the month began, we're at like 452 on SPY. So we're at like 452 on SPY at the beginning of the month. Let's see. And now if we were to close the month out, which is today, I mean, the last day of the month is it's like tomorrow, right? So if we close the month out now, we're down about 4%, 3.75, which is pretty, I mean, that's pretty, okay, fine. It's a decent pullback on the month, and we've had crazier up months in recent months. So, that's pretty. I think that's pretty good. If we just kind of sit where we're at right now on SPY and close up under like that 440, down 3% plus on the month I think it's good. It's healthy. I think it's very healthy. And if we see down 5%, down would be down 10%. If you start pushing like that, there's something bigger going on. I don't think you're just going to pull back that much, as a healthy pullback. So I think a 3% is very healthy for this bull market to continue, in my opinion. Now we got resistance up here toward that 50 SMA, so it looks like 445. 445 we couldn't break above on SPY, so that's key. Breaking above that level is going to be what sends us higher in the market. But I think you're noticing across the board that a lot of we're in I think a transitional period. Let's take a look at small caps. IWM up 0.3, so it's just holding up. Where you're seeing a lot of choppiness right now, and in a weaker month, it's not uncommon. But also, I think you're seeing a transition potentially right now from people playing the large caps to people like, okay, what do I want to trade now? Where do I want to position myself? And I saw something else that IWM, the past 5 days, I think as of yesterday, had the largest inflow that it has seen since I think a period in 2016 after the election, which is crazy. So we're seeing a pretty substantial inflow. Now, we have been since February of 2021, we have been in an absolute chop fest consolidation period on IWM. So I think we're gonna get a really good breakout at some point in the coming months, and November would be my guess. So I'm thinking October, maybe we kind of like chop around a little more. October is whatever, and then October into November, I think my prediction is we break out up over this 235 on IWM, and we see a nice run into the end of the year, and we go 250 plus on IWM, and that's that. Roughly 250 to 275 is where I would say. And that's pretty substantial, but I think we can get that. From where we're at right now to 250 would be a nice 13% move. I think that's certainly possible. I think a 15% move into the end of the year is not out of the question because now, okay, we did make a crazy move. If you go back to last year, right, go back to, what was this? If you go back to October 1st of last year to the end of the year, we went up 30%. So I'm saying if we go up 15%, after this potential breakout, that's not unrealistic in my eyes. We'll see. Everything cooperates and the market cooperates, but that is my want to call it bold. I don't think it's too bold of a prediction, but that's my prediction. Pixie bottom chart. Another thing too, I think is interesting. You can judge the attention and the sentiment, which I think is cool. You can judge it all. But Pixie is bottomed here at $1 a pour right now. I'm going to dive into this one because it's got a tiny market cap. You can judge a lot of the interest, and I think it's. I don't care. I mean, I'm going to do what I do, and it doesn't matter how many views and whatever I get because I enjoy doing it, right? But you can judge. You go back 6 to 12 months, or 8 months. That was all these random channels, every video about stocks was getting so many views because everybody was like so euphoric and so into it. So now it's filtered out a lot of the people who are like just made quick money and left. And now you have people who are looking to stay longer. So you get better engagement. You get better, not better, I'm not saying better engagement. You get better interactions, comments and stuff. People who, they actually kind of care and they actually know what they're talking about now. So I don't care. I do what I'm going to do what I'm going to do. Insider owned over 50% on Pixie. It's pretty interesting. Pixie just did an offering, I believe, right? To raise $12 million via offering of common stock. So they just did an offering. That's good because, generally speaking, chance of them doing 2 in a row, low. They could do it. ATOS did it last year. They can do it. And then ATOS after the second offering went 1,000%. That's another one that's on my list as well to get in at some point here. Okay. Let's see. Do they have a price? At a combined price of $159. Price isn't super, super important, but we are trading, below the offering price substantially. So I think Pixie has a move to the 50 SMA, which is at that 150. I think you can probably look for a decent risk reward right here to that 150, which would be, you're going to risk yourself 12 cents for a 40-cent move roughly. I like that risk reward. This could go higher for sure. A lot of these stocks too, good areas to take profit. Let's say you're in a stock and you're like, where do I take profits? I can't judge support resistance, or we're kind of in between support and resistance. What do I do? Indicators on the daily chart. The 200 SMA, the 200 period moving average is usually a good area to take profits. Now we've broken about that a couple times on Pixie, but it's come back down below every time. So at least taking something off at that level if you get a crazy spike. And the 50 SMA, if you're well below the 50 SMA, that's usually a good area of resistance. I mean, if you look at VISL, now they haven't had crazy news, but look, in past months, ever since we fell below the 50 SMA in July, every time we try to get back above, it's resistance. So that's a spot that is probably a decent spot to trim something off, at least while I'm waiting for this to kind of build and do its thing longer term. Every time I add lower, I add on a crazier dip. Like today, grabbed a little bit down here, a little bit lower. If this pops up to 205 tomorrow, I'll take whatever I bought today. I'll trim it off at that 50 SMA. Eventually, I'm expecting a bigger move. Eventually, we'll get it. This way, I keep my core position. I'm not going to just hold everything, or I'm not going to sell everything on that pop to try to maximize profits. And okay, I'm going to sell it all here, and I'm going to rebuy it here, and I'll sell a chunk, a small piece, and that's kind of how I'll do it. But Pixie, back to Pixie. I like that. I'm going to put that on my list. I like that chart. Risk reward looks pretty good. Market cap of 30 mil. I mean, I don't necessarily like the company because I think they're just a dilution machine. But doesn't mean that it can't spike. And so you're playing the ups and the downs. So let's see. Can we get some earnings on them recently? How much cash we got? Let's see if we can get an idea on that. Okay, private offering. They did a $12 million offering in May. They did one here again in September. Okay. Let's go to BAM SEC. Shift Pixie. We have this right here. Let's see if I can pull up cash. It's going to be small. They got $9 million in cash as of May 31st. That's the latest I can see. It's not so as of May 31st, $9 million in cash. Okay, let's do the math here. We had May 14th, they announced pricing of a $12 million offering. So that's probably included in that, I would imagine, potentially. But they added 12 more. So they have probably, they're probably using a good chunk, but you could probably guess they have at least, they have at least $12 million roughly in cash, I would think. So, roughly half the market cap in cash isn't crazy, but if you're going to play this one with the risk reward here, risk $1. It's a very strong support in penny stocks that are trading above it. Risk $1, and then look for a reward of, I would be looking for at least 145, 150, 140, 150 is my target at least. So I kind of like that risk reward. I think it looks good. What else do we got? How is SPY doing today? Kind of just sitting around. I really would hope that we end up just kind of I like the choppiness in a sense of the range being tighter, where we're not seeing wild swings like yesterday, like we saw last week. Just kind of trade, 0.5% a day, up or down. You're not going to see crazy overreactions. Another thing I also did was I bought some BLNK. We talked about ChargePoint. I bought some calls in my other account. Just because I had some cash there that I was like, yeah, what am I going to do with it? Might as well just toss it in. So I bought that. I think it's actually in the Robinhood account just because I had some cash sitting there. I was like, I'll just toss it in. I bought some $28 calls out for January. So this is actually holding up nicely in the upper 20s as support on Blink charging. I bought $28. So I bought like $1.50 in the money. I bought those calls out to January. So if we get a move, and they were costing me like under $5. So if we get a move on Blink to like 35, which I think is I think we can get a move to 40, right? And that would still be kind of in this range we've been trading in the past couple of months. If we get a move to 40, I'm not even expecting to break out. I don't really care. What would that option be worth? Well, that option would intrinsic value. It would have at least, what would that have? It would have at least 10, almost $15 of intrinsic value, at least $13 of intrinsic value, which would almost be a 3x, or roughly be a 3x from where I got it. So I'm like, okay, if Blink wants to make a move right now, of 40% in the coming months, now maybe it doesn't go that high. Maybe it goes only up to 35. And that would still be like a 2x almost roughly on those options. So I'm like, okay, rather than make, tie up more capital and hold for a 30 plus, or a 25 to 40% move, let me go tie up a smaller amount of capital and look for a 2 to 3x on that money. That's it, So that's the plan on that one. But I bought that, but also the chargers look pretty good. So CHPT charge point, where is it? Right here. We talked about this on the live. Someone pointed out on the live, and I was like, oh my, this is a beautiful chart. You guys, if you go back, you probably hear me go, oh wow. Like I was like, oh, this is actually a really nice chart. Ever since they pointed that out, 3 days in a row, boom, green, green, green. Bouncing off support beautifully. $19 is your bottom end, down towards 20 to 19. We talked about it, and it was sub 20. I was like, hey, sub 20 on charge point is a steal. It looks like chart-wise right now. You got an easy move, I think, to 25, and then we can get a breakout for more, and we'll see what happens. I think 25 to 30 is another question by the end of the year. So there you go. Also note this. Stock has been coming down. Look at the volume. Volume has been noticeably higher through the month of September on this pullback. That's probably telling us that there's a decent move coming. That's why I like ChargePoint. I didn't get it, but Blink and ChargePoint, I feel like they're kind of sympathies. They'll go hand in hand. So if ChargePoint makes a move up, Blink is probably not going to be far behind, and vice versa. That's the plan. That said, I'm going to wrap things up. I got to wrap things up here, guys. I have to go to physical therapy for my shoulder in a few minutes. But outside of that, market is green today, up a little bit. So for me, I have those debit spread, or that debit spread. I got two, I guess. So technically, it's those. I need SPY to close over 436 by the end of the week. If it does, I hit my max profit under 435, max loss. That's kind of the range I'm looking for. If it just bounces back up and it holds up under 440, it's kind of where I want to be. It would be nice, but I appreciate you guys like always for tuning on in. This coming weekend, we will not have Sunday Night Lives because we have Austin City Limits here. Music festival, so I will be at a music festival on the entire weekend, so I will not have live, but we'll do lives. We'll do Wednesday morning. We'll do live trading for Wednesdays, and maybe we'll do like a Wednesday nights. I don't know. We'll figure it out. Maybe Monday night. I don't know. We'll do some lives though in the coming weeks. Just not on the weekend. I won't be able to do that because I will be in the field somewhere out in Zilker Park. So thank you guys so much. Appreciate you guys as always. Check out yesterday's video if you have not already on crypto. I had a video going over Bitcoin to 500K, right? Or to 500K. It's like a 5-year price target by ARK Invest. I just, clickbait, whatever you want to call it, but that was the idea behind the video. We talked about my long-term Bitcoin holdings and where I'm holding it, my thoughts and all that stuff. So we did that yesterday. Check it out, and I will see you guys in a